What is going on, everyone? Welcome back to another video. Keeping it real, guys. Got a full-time job, so it's sporadic with these videos at times, but nonetheless, been trying my best to be consistent with making videos and just overall investing. So we're gonna get right into it right now. Make sure to hit that like and subscribe. I hope every single one of you guys is doing well. I hope not just in the stock market, but overall, these are some interesting times that we live in. So I hope you're doing things that fill your cup. But of course, finances are important. They're not everything, that's for sure, but they are important. So we're going to get into a stock that I've been hearing a lot about from just various people, family, friends, analysts on YouTube. So ServiceNow, ticker NOW. All right. I'm not gonna lie. I've been rather new to this stock. With that being said, I have a friend that works at ServiceNow out of Austin. So I've heard about the company for many years. I just never really knew what he did. So for some reason, that conversation never came up. So I'm going to do my own research, and I highly suggest that you guys just be as independent as you can with your investment decisions. Of course, hearing advice is great. Of course, if you're going to seek financial advice, you want to make sure you go through somebody who's certified. That is not me. So let me just put that out there. Everything that I say is my opinion. But I'd like to think that it's working, right? And maybe not in anyway. The reason why I need you guys to be very, very aware and just strategic and independent and knowledgeable of what your decisions are is because we have a president that does not care. And I really did some research before I said that out loud, but I'm going to show you here. President Trump does not necessarily care about the average American's financial situation. And I said, you know what? Some of these media titles can be clickbait, so let's wait and see. And I still want to make sure that I guess the full context, right? But it doesn't sound good. So here's what he said. If you look right here, the only thing that matters when I'm talking about Iran, they can't have a nuclear weapon, he said, Trump, right? I don't think about Americans' financial situation, Mr. Trump added. I don't think about anybody. I think about one thing. We cannot let Iran have a nuclear weapon. That's all. It was a stunning admission even from Mr. Trump. So I'm not going to get into the minutia and the politics of it, guys, but I just need you to be aware of the words coming out of our current president. If you're whatever. So just take those words, realize what is being said, because the whole point of investing is to build your wealth. And the leader of our country right now doesn't necessarily care if your wealth gets built. So you're going to have to really take another step in doing it on your own. It just seems like he's dead set on this Iran thing. Anyway, enough of the politics. Let's get into the company. So ServiceNow is a leading American software company founded in 2003, 2004. You guys can really get into, their origin, but they're out of California, so US based, very good. Almost 30,000 employees, very, very good. And a market cap of almost 95 billion. All right, with $14 billion in revenue over the past year to date, right? Stock symbol NOW on the New York Stock Exchange. Now, let's get into why they're doing so well, right? So I'm just asking AI, top reasons to own ServiceNow stock. Go do your own due diligence. I like to just scrape the area of AI. So ServiceNow is widely considered a strong long-term investment due to its leadership in workflow animation, right? So that is a very significant area. They also have a robust 20% revenue growth and high profitability, which we'll get into in a little bit. The company is capitalizing on the AI boom through its Now Assist generative AI suite, right? Fortune 500 company. And I wanted to highlight here that, where is it? It boasts high customer retention with its platform used by over 85% of the Fortune 500. I need you guys to know that these cats are in with the big boys, right? Not the cheapest stock. Okay, however, look right here. Attractive valuation after the dip. The stock experienced a significant price decline, making it potentially undervalued for long-term investors compared to its growth prospects, right? Full transparency, guys. I thought not even a month ago, 2 months ago, that dividends were the way. If you have more than a 10-year horizon, I would say, dividends, in my opinion, you shouldn't be in them right now. Now, if you want to get started, that's great, but I just had some conviction over some of the dividend stocks that I have saying, hey, there's opportunity cost with companies like ServiceNow, right? Who, even NVIDIA, I mean, that stock can take off. To me, in my opinion, guys, NVIDIA, Tesla, Robinhood, even AMD, I think has some room to run from what I've heard. So not a bad idea to look into those. But my strong pick for this next leader is going to be ServiceNow. You may have not heard of them, but I even heard someone say this could be $1 trillion company one day. All right. So the last thing we're going to look at is some of the financials. Got to get into the good stuff. Haven't done this part in a while, and it's so important. So let me preface that. The accounting behind these companies can tell you a lot about their future, right? So the ratio is total revenue divided by operating expense, which gives you almost, 1.3 or something like that, 1.4. Not bad at all. Anything over 1 is really, really good. And then, of course, the higher, the better. So I think it's the operating ratio. I'll have to look into the operating margin ratio, which is good, right? Balance sheet, you usually want to do total assets divided by total liabilities. We are sitting at a clean almost 2.0. So again, that wants to be over 1. The first two categories in the income statement and balance sheet, once you do the math, you want it to be over 1. So far, 2 for 2. And then we want to look, of course, guys, there's so much more that goes into these sheets. So don't just stop and look at those things. But like research and development is very good. They got $3 billion going into that, right? But of course, you also want to look at something like debt, right? So we'll get into that in a little bit. So we already looked at that. Is debt here? No. But you can also look for shares, outstanding shares. Looks like 1 billion shares are out there. And then cash flow should give you, all right, so 2 things, right? So operating cash flow for this company, $5.4 billion. Very, very solid, right? A positive position and cash position of $2.7 billion. Free cash flow of 4.624. And please don't tell me this. They got 0 debt. Okay, it looks like they had debt. Oh my gosh, if they are a debtless company, we have to confirm. Let me not skew this. Does ServiceNow have debt? I don't know how else to ask, but okay, yes, ServiceNow carries long-term debt reported at approximately $1.49 billion as of March 31st, 2026, and is in the process, sorry guys, of a potential $4 billion bond sale to fund acquisition. So again, you want to be careful. However, I think ServiceNow is a solid pick coming up. Let me know what you guys think. Have a great day, and let's keep it green.